The dollar index DXY and US yields helped keep gold on the back foot yesterday, with dollar strength continuing this morning. The US dollar appears to be benefiting from a risk-off tone this morning following lackluster data from China, as well as Moody's downgrading a host of small to medium-sized U.S. banks. It will be interesting to see if the DXY is able to hold on to gains as the U.S. session begins. Yesterday's rally failed to hold the high ground as the U.S. session brought a modest pullback, with the index struggling to close above the 50 and 100-day MA. Personally, I do think we could be in for a period of consolidation heading into Thursday's U.S. CPI print. There is not a lot on the calendar in terms of risk events today, with Fed policymaker Barkin scheduled to speak later in the day. Should Barkin strike a similar tone to Michelle Bowman, the dollar may continue to rise toward a key confluence area between the 103.0–103.55 area, with gold prices likely to struggle as a result. From a technical perspective, gold prices do appear as though a retracement higher could be in the offing. A key support level rests around the 1,927.0 to 1925 mark, and a failure to break below may sweeten the narrative for bulls. The precious metal is stuck in a tight range between the 50-day MA and the 1,925.0 to 1,927.0 for the last 4 days. A break and daily candle close above the 50-day MA could facilitate a run up toward the 100-day MA, resting at 1,967.67. Alternatively, a break lower from here could lead to further declines for gold, with the 1,900.0 psychological handle remaining a possibility. It is important to keep in mind that with US CPI out on Thursday, price could continue to consolidate, with market participants likely to minimize risk exposure and reposition ahead of the release.